What's up, traders? Anthony Crudele here, and welcome to 10-Minute Technicals. In today's video, I'm going to go over how to choose which index to trade. Now, I know many of you are probably just trading the S&P or the NASDAQ or the micros for those products, but maybe it's time to venture off and take a look at the Russell and the Dow. Now, if you're a really new trader, I wouldn't recommend it. I think once you get some solid footing on whatever index it is that you're trading, I don't think it's a major leap to move from one index to another. Now, they do have different tick values. They do have different characteristics. So it's not something I would say you want to do without spending some time watching them and maybe even spending some time on sim or going to the micros and the products just to get a feel for them because they do trade a little bit differently. But ultimately, when I look at the indexes, I look at the indexes as a whole. And I would say just over 10 years ago, I went from just trading the E-mini S&P for the first 15 plus years of my career, a little bit of NASDAQ, a little bit of oil and gold and 10-year, but really just the S&P when it came to the NASDAQ or when it came to the indexes. And so when I moved over and started trading more NASDAQ, I started looking at some Russell and I started looking at some Dow. It really opened my eyes to really not trying too hard on days where the S&P looked like a two-way tape to try to turn something out of it, when I would see a day where the Russell looked like it was going to be bid or offered, or same for the NASDAQ or same for the Dow. They just looked more like a trend day versus, the S&P, which was my primary market. And I feel you as a trader, as you grow, when you expand to the indexes, I actually think it actually slows things down. I think you actually start to trade less. I think in your trading decision starts to get even better. And I think when you go back to your main index, you become a better index trader because you understand the rotations through the indexes. They're going to look very similar maybe on a really long-term time frame, on a weekly or a monthly, but when you get down to a daily chart, there's a lot of divergence days. Look at today as I'm recording. Russell was weak, Dow and S&P were a little stronger, NASDAQ maybe in the middle. Nonetheless, you had a divergence day. You didn't have them all going up half of 1% for the day, or all down half of 1% for the day. It wasn't clean. There was divergence, which a lot of times, is going to cause, whether you believe it or not, in your short-term strategy, it's going to cause you maybe not to hit a target, or maybe just get clipped on your stop and the market comes back in a range, because markets are divergent. And you're always going to get the cleanest moves when all the indexes work together. But when they don't work together, you want to buy the strong and you want to short the weak. Now, I think you really have to choose which one you want to do, and it's going to be based upon primary trend. For me, on a personal note, I'm never going to really short the weak in a bull trend, and I'm never going to really look to buy the strong in a weak tape in a bear market tape. I pretty much like to buy the strong in a primary bull market, or I like to short the weak in a primary bear market. So let's take a look at the charts here. So I have a daily chart up, and I have really some simple things going on. I have an anchored VWAP. Anchored VWAP is the beauty is in the eye of the beholder. So wherever you anchor it, that's really up to you. I just have mine anchored to the beginning of last quarter. As we get now into the fourth quarter, I kind of want to see what the market's doing from that basis. And you can see the VWAP's it's just kind of flat. It's not really helping me with anything right now. I just have daily candles up. I have a 20 period, 3 standard deviation Bollinger Band. And then I've got a moving average ribbon here from Sati, hat tip to him. He offers it for free, him and Ripster. This is really their methodology. It's 821.34. It's actually very common. You're going to see a ton of people talk about this, but they're just great educators on moving averages and how they use them. And I like them to really get a good daily perspective of the market. Is the market trending? Do I see that band, that ribbon, or it's green or it's red, or I want to see what primary trend is telling you. And you can see today or as of late, it's that blue green. So moving averages are going up, left to the right. Then also my beacon indicator, which is also free. My beacon indicator is pretty simple. It's a Fibonacci retracement, but it's 70%, 30%, and 50% lines that go over Bollinger Band peaks. Now, why do I use this, and why does this help me determine what index to trade? Once you have that done, it's pretty simple. And I really don't care what you use on a daily basis to determine what index to trade. I think whatever it is you're going to use, be consistent on every index. If you take anything from this video, is that look at every index using the same tools. Don't just randomly pull up an RSI or a MACD or something else up there and assume that you're going to go, oh, this one's overbought or this one's oversold. Look at them all on the same time frame and compare apples to apples. Don't have different indicators on your charts. That's number one. So these are the indicators I'm using. Then I'm going to go and I'm going to take, all I'm going to do is just take my one of my drawing tools, and I'm gonna show you something that I see that really helps me understand what's happening within the daily charts to determine what index I want to trade. So first thing I want to look at is, as you can see up here, the Bollinger Bands, they're opening up like a mouth, so they're moving outward. And so what I look at first is I'm going to take my rectangle and I'm just going to box out my red to yellow line. What I'm boxing out here is really just my recent resistance and my recent support. And I'm looking to see what they look like. Are they above that box or are they below that box? And really, if you take this back here and go all the way back, this is really just kind of been a boxed out range I've had for a good period of time in the S&P. You've got support and resistance levels that have coincided there, some recent highs, some little blips above it and coming back in. So it gives me perspective of where we are using my beacon indicator on the charts. And the Bollinger Bands are moving outward and we're above the box. So initially that tells me the S&P is bullish and the S&P is in range expansion, potentially higher probability of going higher. So that's what I see here. And the reason why I say that is because it's above the moving averages, it's above my box, it's above my beacon resistance. Bollinger Bands are moving outward. It's just above everything, right? We're near recent highs. So it's a very bullish looking chart. And so if I'm going to trade it intraday, I'm going to look at the S&P and say, you know what? The S&P right now is above everything. If I see pullbacks on my short-term strategy, I want to be a buyer of it. And it looks pretty solid, pretty solidly strong on the chart right now. Let's go to the NASDAQ. Now, here we are with the NASDAQ. And if you take that same tool that I had up with my rectangle, you look at the NASDAQ, if I draw it from that red, I drew it to the red to the yellow in the S&P. I drew it to the red to the blue here just because the NASDAQ has been a little bit of a wider, more volatile range in the belly here. It's not breaking out above the box. It's not above my red resistance. It's barely above, I don't have a VWAP on here, but it doesn't really matter. It's barely above the moving averages. It's sitting right in the belly of the recent range, and it's a lot further from the high. And the Bollinger Bands right now, they're opening up, but it's not opening up and getting near that Bollinger Band where we're like in range expansion. This to me is just a two-way tape. You know, if you just take it from its basic, simple looking at what we've been doing here, it's a two-way tape. I mean, we're well within the range and we're just trading kind of almost a little above the middle of what we've been recently, but more or less it's in the middle. So I look at this and say, if I have a NASDAQ or S&P buy signal, which one would I favor? I'm going to favor the S&P. The S&P looks bullish. The daily chart's more bullish. Even though the NASDAQ might not look bearish, the S&P looks more bullish. So that's one checkbox for the S&P, that it's just favoring NASDAQ when you compare apples to apples. Next, let's take a look at the RTY. So here we are with the RTY. And this is a Russell 2000. And let's go to the red to the blue on Beacon again, right? And you look at what the Bollinger Bands are doing. We've been in the same Bollinger Bands for a while now. It's just really not much is happening. If you look at what's happening here in the Russell, I mean, the Russell, just take it back further and further. This is the epitome of what a two-way tape looks like. So they're not above the red line. They're not above the box. They're just barely above the moving averages. So overall, it looks more like the NASDAQ than the S&P. It's a little closer to its high. It's made a recent higher high. Big deal. It's not made a higher high. Also, that range expansion look on the Bollinger Bands. Now, when I see this, I say, okay, if the Russell gets a signal intraday and the NASDAQ and the S&P, and I'm looking at them across the board, and I get a buy signal, which one am I going to favor? I'm going to favor the S&P. But what I have to keep in the back of my mind is the S&P is probably going to be a little bumpy and a little tight because it has tentacles that feel what happens in the RTY and the NASDAQ. Because it is really the center index. It is the main index, the center of the universe, we used to call it in the S&P pit. It's the index to look at. And so you know it's going to be a little bumpy, but I'm going to definitely favor taking S&P long signals over Russell or NASDAQ right now. Next, you're going to take a look at the YM. When you look at the Dow, look at how much stronger the Dow looks. Let's actually take this out. And I've been talking about this in my daily note. Look at the Dow. You know, when you look at what the Dow is doing, the Dow is well above the moving averages. You see the ribbon here is so much more blue and green, which means that the moving averages are really getting, you know, a lot more vertical, which is bullish. It's well above the recent high. It's above resistance, which I had here on Beacon. It's above everything, and it's hugging that top Bollinger Band. That's very bullish. And so the Dow is actually my number one favorite one for range expansion right now, and my number one favorite intraday signal for longs. And it really comes down to the simplicity of they have the most bullish daily chart. So if I get down to it, if I'm trading the NASDAQ or the Russell right now, you're trying to hope for that catch-up trade. right? And remember, there was a time where the Russell led, and there's obviously a lot of times where the NASDAQ led higher this year. And those are the markets you wanted to favor. But now you have a Dow that's the strongest, followed just by the S&P. So what am I doing during the day? I'm putting up my Dow and my S&P charts. And when I've got those charts up, I look at them next to each other. If they're both in a buy signal on my same strategy, on my same time frame, I'm going to take the Dow with the biggest position and maybe secondary the S&P, or I just use the S&P as confirmation. So I'm going to go and hone in my strategy, and I'm going to take the highest probability signal, which I might get across the board. I might get that same signal on Dow, Russell, NASDAQ, and S&P, but I'm going to take the one that on the daily chart is favoring the one direction over the other. And that's going to continue to shift. You're going to see these divergences back and forth. And you now have, in my experience, you have now put the probabilities more in your favor by choosing the index that's leading the market higher, buying the strong. I'm not trying to buy the weak in the Russell. I'm not trying to buy the weak in the NASDAQ. Although some of those signals may work from time to time, I'm going where the probabilities are, where the math is. The market that's breaking out is going to have the highest probability of hitting my buy signal target. And that to me is just one of the simplest things you could do when you come in every day. If you're an index trader, look at them across the board, apples to apples, same indicators, buy the strong or short the weak. Right now we're in a bull market, so I like to favor the market that has the strongest looking daily chart. So when I get to the short-term strategy signals that we all look at as day and swing traders, that's the market I favor, and that's how I choose which index to trade.